Welcome to this week's edition of Talk ETFs. My name's Sumit Roy, and I'm Senior Analyst here at ETF.com. Have you been keeping up with gold lately? Because if you have, you've probably noticed that the metal has been making quite a move. It's up 8% so far in 2023, and it's hovering right around the $2,000 per ounce level. But does this rally have legs? And should people be considering an investment in gold ETFs? Those are just a couple of the questions I'm going to be asking Joe Cavatoni, who's the Chief Market Strategist for the World Gold Council. Joe, thanks so much for joining me.
Great to be here.
Joe, I want to start by asking you about the price of gold because, of course, that's what everyone's interested in. Currently, gold's hovering around $2,000 per ounce, but can you help put that in historical context? Is that high? Is it high on an inflation-adjusted basis? And is it high in other currencies as well?
Great question. Right now, we're looking at a gold price that is teetering towards its highest level, all-time highs. Over the course of 2022, one key observation that we would have for people is as the dollar weakened, what we did see was an absolute strengthening of gold in the context of foreign currencies. So you actually saw very high levels of performance around the globe. And actually, really interesting fact that comes with that is growth in the ETF markets that we were seeing around the globe was actually in positive territory. It was actually a risk off trade in the US market. But going back to the price point, we're seeing gold hitting high levels, all-time high levels, and continuing to head in that trajectory. And it's simply because of how it's being positioned in portfolios and what role it's playing right now in terms of financial market security and stability as people are dealing with really, really challenging markets coming out of the COVID situation, dealing with geopolitical risks that are still on the horizon, and then really trying to navigate this entire environment that we're in as it relates to the economic outlook, whether or not rates are going to continue to rise, how inflation is going to be met with, and ultimately how we're going to land in terms of the economic outlook and the picture forward. So again, record highs in terms of where we are touching, but right now around that 2000 level, seeing support as some people are taking trades and risking off the positions that they've got.
Joe, I want to ask you about gold ETFs. You did touch on them. What's going on with those? Are we seeing inflows into gold ETFs this year?
We put out a 30-year GDT report, which is our gold demand trends report. We put out the 30th anniversary report. I'd love for people to go take a look at it and see what's happened over the years. What you find is investment and central bank consumption has stepped in and actually really grown demand beyond what it was historically, which was about 40 to 50% jewelry. And particularly in the ETF landscape, in 2003 and 4, when you start to see these products come online, it was mainly a US product. But over the course of the last 15 to 20 years, what you've seen is diversification around the globe. And this year, and actually parts of last year, was a great observation of different parts of the world, different points on the cycle of rate movements, different geopolitical risks causing different flow outcomes. So year to date, we've seen flows have been tending to be a little bit slower as people have tried to read this landscape into 2023. And what we're starting to see over the last month, and in particular, our March flow report, we highlight the fact that it's the first time in, I believe, 9 months where we've actually seen positive flows across the globe into the ETF landscape, mainly coming in the form of flow into the US ETF market and the shift in the European arena as well. The largest products starting to move from negative flows into positive territory. And that's a move that we're starting to see pick up. And as we see how it plays out over the next month or two, maybe 3 months into the summer, you'll start to see what the ETF community and that sticky investor buy and hold flows are going to look like. Right now, you've got 3 products that are leading the league tables in terms of growth. It's GLD, it's IAU, the European version of that product, and also GLDM. And in terms of GLD and GLDM, that's basically speculators and capital markets investors. Plus with GLDM, you've got those people that are buy and hold fee-sensitive investors. So you're seeing it develop in a very positive way, and actually keep watching the space because that's going to really give you a sentiment around what investor demand is looking for when it comes to the US and the European markets.
Can you talk about some of the other trends in demand that you're seeing? You mentioned jewelry, central banks. Are those still really important when it comes to the price of gold?
The key starting point for any discussion around the demand trends is to start with 2 facts. Number 1, gold is a global asset. And number 2, gold has many different mechanisms for it to be consumed. And the demand side is unique, particularly amongst commodities. which is why when you look at the $9 trillion ETF market, we are the largest commodity at 2.2% of that in terms of the overall growth in the ETF market. We are the largest of all the commodity markets. So those two factors weigh in big time. So what you're finding as we look at the gold market into 2023 and part of 2022 in particular is central banks have been very large consumers of gold. And actually, that's been a trend that we've seen for the last 13 years. And actually, right now, what we're seeing are record flows in terms of 2022. And our expectation that 2023 is probably a slowdown, but still continued flows. Now, this is about 20 different central banks worldwide, and they are actually consuming gold as part of their reserve portfolio. Secondly, on the jewelry side and the consumer side, as we would refer to it, China and India are really coming out of a zero COVID tolerance in China, for example. So you're starting to see life getting back to normal, things happening in a way where consumption can actually take place in more traditional forms. So you're starting to see that demand for jewelry, that demand for small denominations of gold to pick up in markets like China. So I'd keep an eye on those two big factors because they've been a growth area that we've definitely seen. The last point I'd highlight, which is something that when we often talk about ETFs, we overlook in particular in a US market. Retail demand for coins and bars, small denomination, has been very high in the US market, and it continues to be high. And this is a signal that ETFs and small bars and coins continue to mean that people want to have that safe haven asset in their portfolio. So while it might be muted a bit on the ETF side, and it'll probably follow into the summer when we start to see the big flows coming in, you're still seeing those bars and coins being consumed. That's a phenomenon in the US market. It's also something we've seen a bit in Germany and other parts of Europe. So big demand across the board. And again, unique versus oil or other commodities that you might be looking at, including silver, which has had a really fantastic run. But silver, again, largest consumption is in the form of industrial use. Unique and very kind of specific demand for gold.
Well, awesome. That's a great place to end it. Joe, thanks so much for taking the time.
Great to have been here. Thank you.